Hey guys, how's it going? Sean back here with Everything REI, and today we're going to do a quick May market update for the Bay Area. Coming right up. Okay, so about a month ago, I did this market presentation about how the real estate market in the Bay Area was progressing throughout all of April. Now it's been about a month since then. We've been in our shelter-in-place mandate for 2 months now, and I kind of want to show you how the Bay Area market has reacted. And so this presentation is from Aculist.com. They provide great statistics for real estate agents out there. And this is the daily status. They release this every single day around noontime. So this is the data as of yesterday, 5/17. You can check it out at aculist.com/aculist-daily-status. Okay, so let's check it out. Now, we can immediately notice here that new versus sold has changed quite a bit. So this is what a typical spring looks like. You have a lot of new listings out there. You have some sold, right? But after shelter in place happened, immediately we had a huge uptick in canceled listings, withdrawal listings, and all these new homes suddenly off the market. People didn't want to put their homes on the market. Of course, that persisted until mid-April. After a month or so of going through shelter in place, people were more comfortable with the fact that, okay, homes are still selling, the sky hasn't fallen completely yet, stock market is doing okay, let's put a home on the market. So we've seen here since late April to early May, new homes have actually increased quite a bit. There's actually a lot of people who are listing their homes right now. We haven't seen the home sales go up, but that's also because it takes about 30 days or so for a home to, go on the market and then actually get under contract and then finally close. So we're still seeing this. So this is like a 30-day lag of, what was going on here. So these homes up here are now selling, and that's what's being reflected right here. Now let's look at the statistics. This is a 2-month period from March 16th to May 17th. And the amount of solds, as you can see here, has decreased 37% compared to last year. So this is obviously a very, very bad spring. And same with the news. We have 40% less new homes on the market compared to last year. Down contingent, down pending. And a lot of withdrawn, a lot of canceled. But again, this includes the data from March and early April when everyone was in full panic mode. They didn't know what to do. They took their homes off the market. So, I would kind of like to see this slide, but just for the past 2 weeks of May, because we're starting to see more and more normalcy here. If we look at the new homes listed from 2019 to 2020, in 2020, you can see here, homes aren't where they're supposed to be. We're supposed to have this much inventory, but we only have this much inventory. So basically half. But in the later May months, you can see here that we're kind of catching up now. We're going a little bit higher. To me, that says that people are more comfortable putting their homes on the market. Again, no one here is forced to put their home on the market. No one is really selling their home out of desperation because even if the banks want to, they can't foreclose on you right now. So they're actually putting their homes on the market because they feel like there's opportunity to sell it now. If we go on to sold listings, we can see that solds have gone down steadily over time. And that is a little bit worrisome. It means that homes aren't selling as much. Maybe some inventory is staying on the market longer. Again, pretty much expected because we are in shelter in place. No one's really going out and really buying homes. But there are some people buying it. And again, these lower numbers also are reflected of the fact that we had less new listings in the past. So 30 days from now, hopefully this number increases. Now this is what's more interesting to me. Change to contingent. So what happens after you are under contract is you instantly go to contingent. So contingent means that, yes, I agree to buy the house, but I have like an inspection period or something like that. And that's where you can go into the home, do your inspections, and at the point it's still contingent. So if it doesn't meet your contingencies, you can back out of the deal and get your deposit back. And the good thing is we have seen that this number is increasing. So every single week, more and more homes are actually going contingent. And yeah, that's great. It's just showing that people are actually buying the homes. And like I said in the last slide, when you look at the graph for homes that are being sold, it looks like it's going down, but this number is a 30-day lag of when it went into contract. So this home here that's sold actually got into contract back in April, whereas this one probably went under contract this past week. And same with pending. After you're done with your contingency period, it goes to pending, and basically that's the time when you do your appraisal, you get your loan done, yada, yada, yada. And that number is also slowly going up. So it's a good sign. If we look at transactions that fell through in the beginning of coronavirus, in the beginning of our shelter in place, a lot of transactions fell through. You know, people were scared, they backed out. Banks probably didn't do loans for you, and it was a mess. But now it seems like it's pretty normal. We're seeing similar amounts of transactions as we did last year. Cancel listings, very similar. In the very beginning, people panicked, they canceled the listing, take their home off the market, and they're done. Now, people are used to the situation and they have adapted, and now cancel listings are about the same as they were before. Very similar with the withdrawals. Boom. People took their homes off the market, and now it's the same as last year. So if we look at the new listings and sold homes, there's like two trends going on. We can see that more and more people are willing to put their homes on the market, and these homes aren't selling as fast, or not as many homes are being sold. So we don't really have a pending to active ratio here or close to active ratio here. But like I mentioned before, this number going down is probably because the number of homes that were being on the market went down. So it is a little worrisome that less and less homes are actually being sold because, supply and demand. If there's more homes on the market and there's less people who are buying and closing it, then the values of the homes on the market will go down. But if we look at this graph right here, the contingent and pending ones are actually going up. So that's a good sign. It means that the homes are getting gobbled up at a higher rate. So this whole chart that Acculist worries about are from these 5 counties: San Mateo, Santa Cruz, Santa Clara, San Benito, and Monterey. Let's look at another report. This is the same from Acculist. And they are talking about single family homes here. There's also another one for condos and townhomes, but I don't care about condos and townhomes. So I'm gonna stay with single family stuff. And I really only care about San Mateo and Santa Clara. Santa Cruz and Monterey and San Benito are cool, but that's not on my personal radar. Okay, so let's check it out. Okay, despite the shelter-in-place orders, median prices held up, even gaining compared to last April in 4 of the 5. Santa Cruz decreased by 4%, which is pretty sad. But the other ones are actually up. So San Mateo is 104% compared to last year. Santa Clara is 103%. So surprisingly, we didn't lose, we actually made more. And let's see, the shelter in place did show its effect dramatically in closed sales, which were off by 50%. So 50% less were sold. Santa Clara, 36% less. And San Mateo, 50%. And new listings were off by a lot as well. So let's look at it for San Mateo and Santa Cruz. Okay, so the median single family price home was $1.64 million in San Mateo County. That's a lot of money. Sold in 9 days for 104% of the list price. This 9 days is their DOM. It's hard to say this is a true DOM because MLS has frozen the DOM statistic because of shelter in place. So I'm going to ignore that for now. Inventory is up 19% from March and down 6% from last year. Not too bad for San Mateo, I think. Number of new listings for the month decreased 18% and was down 39% from last year. Closed sales also dropped 31% from March and down 50% from last year. Thanks. All right, in Santa Clara County, median single family home costs $1.39 million. That's pretty nuts as well. And is sold in 8 days for 103% of the list price based in 506 sale. Oh, got it. So maybe so back up to this number, this is premiums. Premium meaning that if you list it, how much do you think it's gonna sell? So in Santa Clara County, it sells for 103% of what you listed for on average. Which is not too bad, because I remember a couple years ago, it was like 6% or even 10%. So if you're listing for $1 million, it'll sell for $1.1 million. Average days on market dropped to 18 days. And number of new listings decreased 18% over March and 46% from April of last year, which is very sad. Like, the Bay Area housing market really thrives on its springtime numbers. That's when most of the sales get done. And in my opinion, I still think it's very pent up energy. Like, when this is all over, people are still going to want to go out and buy houses. Once they feel secure with their positions, once they have some normality in their lives. And that's why I think the fall is going to be very, very strong. But we'll see what happens. So here's just a table of what I recently just mentioned. And let's see, Santa Clara County, 20% inventory change from last month. We lost 11% for closed sales. Median prices dropped by 1%, which is pretty sad. San Mateo County dropped by 6% from last month. Yikes. So maybe there is a small dip. Okay, median days on market, new listings. We talked about this already. Listed price received. And compared to last year, we have less inventory, we have less closed sales, but our prices are a little bit higher. See, San Mateo increased by 2% and we increased by 5%. Well, I hope you guys all found this very useful. I think it's always great to take a snapshot of what's going on in your local market just to see how everything's going. See if you want to continue making acquisitions now or if you want to think about selling properties that you have. Now's a great time to make those decisions and carry out your plan. So let me know what you guys think. Do you think the housing market will continue to stay steady or will it collapse in the very near future? Leave a comment down below with your thoughts. And thanks again for watching. If you guys enjoyed this video, please smash that like button and subscribe to the channel to see more videos just like this one. Thanks for watching, guys. I'll see you next time. Take care.